Traders, welcome back to the LPR Trading Group YouTube channel. I've got another video for you guys today. We're going to talk about finding value in your trades because I've been puttering around a little bit and hearing a few things from some different people, and it's actually making me sick to my stomach how some of these, well, number one, people are teaching other people how to trade by searching for absolutely no value in their trades. They're just buying high breaks, selling low breaks, doing all this nonsense retail stuff. So I'm going to go through a few charts here and try and talk you out of this really bad, terrible retail way of trading. Now, the reason why this works is because when it does work, it's really fast money, right? So it looks really good, especially when someone's streaming it and, oh, I'm in, and something rips high of day, and wow, I made $2,000 in 4 seconds. To me, it's nonsense. There's a place for it, but the way some of these people are teaching is they seem to think there's always a place for it, which there's not. There's certain market conditions that we can do this in. It is actually the last trade I would ever take. It is in my playbook, but it is the last trade I would ever take. So what I'm going to do is I'm going to talk about this chart here. I'll talk about yesterday's chart as well, just so we're not super biased on today. But what I want to do here is talk to you about how to properly find value in your trades. Now, what do I mean by finding value in your trades? Well, let's look at this right here. This is ES, the future. So prices moved up and made a high up in these areas. Now, let's think about this price action as if we walked into a car dealership on day one, down here, and this vehicle that we want to buy is worth $10,000. Okay? Then we walk into the car dealership on day two, and the same vehicle that we wanted to buy is worth $12,000. Are we buying this vehicle on day two? Likely not. Now we walk back in on day three, and this vehicle we wanted to buy is worth $15,000. Well, what a lot of these bad retail traders do is the day opens, the stock rips, or the market rips, or whatever you're trading. It flattens out and makes a high of day, and they just say, okay, well, I'm going to buy if we get through the highs. Well, why didn't you want to buy back at the beginning of the day when price was cheaper, where there was possibly value? You just want to buy the high break, and 2 days later, or 2 minutes later, or 30 minutes later, pay much more for the same instrument, right? So they go on and they buy this high of day break. Okay, great. Congratulations. It worked. It ripped high of day. It flew. There was other reasons why this worked. It wasn't just the high of day break. We're going to buy and, it's going to rip to the moon. Now, let's talk about the high of day break. Well, if we have the high of day break in here and we actually buy high of day, number one, you're buying high of day with a lot of other bad retail traders, so your fills on the high of day break, even if you're trading a very liquid market, are likely not going to be super fantastic. Okay, you likely won't get filled right to the tick on the high of day break. You're going to get a little bit of slippage into the trade. The market's going to move really fast because a lot of other terrible retail traders are getting in over this high of day break. Instead of buying this high of day break here, why don't we mark some areas of value and say, okay, well, now we know this vehicle was worth $10,000 at the start of the day. At some point, it was worth $15,000. You know what? I'm probably not going to get it for 10. I already had the chance. I missed it. I don't want to pay 15, but maybe a technical area on the chart right here, back where we pulled back originally into that $12,000 vehicle range. If price can get back into this range and give me some value now where I can buy at 12K and sell at 15K with a defined area to risk, this feels like a better trade. Now, I know what you're thinking. Dave, this trade didn't work. I should have just bought high of day. Look, it ripped. I bought high of day, ripped. We made a pretty penny, blah, blah, blah. That's why I'm showing you this chart, because this is the reason you keep trading these god-awful high of day, low of day breaks all the time. Like I said, there's a time and a place for these things. It's not always, and most people think it's always. And what they forget about in the market is how to find value in their trades. They don't have patience, and the people who don't have patience are just transferring wealth from those impatient traders to the patient traders that are waiting for value. And they're going to destroy you. Okay, they're going to destroy you over and over and over again. What did we do in the chat room today, for example? Market ripped. We can't touch it. What we did was we had an area of value set around here, and I said in the chat, if price comes back into this area of value, we'll look to buy. It never got there. What do? We didn't buy. Why do we want to buy here? Because price opened at 10K. This was the 12K price. Maybe this was the 14K price on the car, right? Just this analogy here on the car. It pulled back to 12K, gave us some value. We knew it was already worth 14K and it could possibly go back to 14K. So it gave us some value. It gave us a target. It gave us something to look at where we can say, yeah, it was there before. It could go back there now. Now, if we were just buying the high of daybreak here at 15K, where is price going to go? I mean, we could look left into the pre-market and everything, and that's absolutely fine, right? But short term, thinking about today, where could price go? It's really hard to tell. Okay, it's really hard to tell. Now, yes, big picture, which we look at as well. Price can go to these pre-market low areas, this area, that area, blah, 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 whatever it is, okay? And this is all well and good, and you should absolutely be using this in your trading. But don't get distracted by the fact that buying these high of day, low of day breaks are going to get you in big trouble. Because number one, the risk factor on these. If you are buying this break, where are you risking? Here? Here? Low of day? Like, where's your risk? Okay, let's say at the tightest, your risk is here. This is your risk. Just to get 1-to-1, you need up here. This seems like a bad trade to me. Now, a lot of people tell me, well, Dave, I'll buy the high of day break, and if it breaks high of day and just fails, I'm just going to get out. Okay, so it breaks high of day, fails, and then goes. Oh, I would get back in. Okay, it breaks high of day, it fails, it goes a little bit, you get back in, it fails, I would get in, then get out, and then I get in again, and then I get out, and then I get back in, and then get out again. Come on. Come on. Like, really? Guys. Look for value, okay? Look for value. So what did we do on today? We looked for a value zone. This is the only value zone we had here. Once price started moving up here, our buy value zone was back into this area. Price never came back. We did recognize at the top that price was stalling. And for those of you who have watched videos in this channel before, you know we use footprints and order flow. So if we go back to the chart here, if it wants to open, which doesn't, here it is. If we go back to this guy, up in this area, this is where we started realizing on the order flow and the depth, the DOM, that we were stalling, price was stalling. Buyers started realizing I don't want to pay up here anymore. I don't want to buy this vehicle for $20,000. Okay, it's just too much, right? And once we start realizing that, we can see within the footprints and the order flow when and where this thing wants to reverse. So we actually started getting entries on this up in the 52s. Right in this area. We started getting short in the 52s. Okay, and this is where we took the trade from, and we wrote this thing down. My last partial personally was right back down into this value area that we had for the buys last time in the 20s. Okay, that was my last piece that I took off. Now, did we go down lower? Sure, we went down a little bit lower. We ran back up. Right after I got in that trade, we got down, we got our first partial in here, I got out of the trade. Okay, back to value. Let's go to yesterday, because this was it yesterday? No, day before. Yeah, this is an interesting day here. Okay, so in the morning, the market ranges, bounces around. As per what we trade and how we trade it, there was an entry here, long. For me, this was the only long entry of the day. Why? You're gonna say, Dave, look at all these pullbacks. Yeah, okay, there were pullbacks, and maybe there were some like C, B minus entries here. But if we're looking for value, this was the $10,000 car. This was the $12,000 car. This is the $15,000 car. This is where the car's $17,000. This is where the car's $20,000. You get my gist, okay? As price is moving up, we're at 13,000. We pull back to 12. We go up to 15. We pull back to 14. We go up to 17,000. Pull back to 16. Pull back to 16. Up to 20,000. Pull back to 19.5. up to 22,000, pull back to you see how the pullbacks relative to where price came from aren't giving us any value to get in to get long, right? We know this was at $10,000. We're interested at $12,000 if we got a pullback into this area. We were interested when it got to $15,000, talking about vehicle price, if it pulled back and came back into the 12.5. We're not interested if price is not giving us any value, okay? A stair-stepping trending day is extremely difficult to trade. And what it does is it instills FOMO and nonsense in all of the more amateur traders' brains, especially, even intermediate all the way up to advanced and professional traders' brains. These trend type days, if you miss the one or the two possible entries on a day like this, FOMO. And then what you do is you go back and you hindsight everything and you start throwing on all your indicators and this and that, and then the X indicator, and then the apple indicator, and the banana, and everything goes on your chart, and you're saying, oh, okay, you know, on days like this, when my X indicator comes in, then the apple banana with the 2642 cross, it always works. No, it was just a trend day. It didn't give you any value. It didn't give you any deep pullbacks. It just simply went up. You knew price was 10K. You were willing to buy a value pullback at 12K. It only pulled back to 11.5, then went to 15, then only came back to 14.5, then went to 20, then only came back to 19. It was at 10. We wanted to buy at 12 on a value pullback. We wanted to buy at 15 on a value pullback. We wanted to buy at 20 on a value pullback. It never gave it to us. We cannot take the trade. Another way people get run over on days like this is, okay, Dave doesn't want us to buy the value pullback. I'm just going to short everything then. No, you're going to get run over. It's a trend day. How do we know not to short it if it's a trend day? Because we don't know it's a trend day until it's a trend day, right? How do I know this is going to be a trend day here? I don't. I had a long entry here. I missed this actually. Long entry here. Missed it. Price pushes around. We look for setups. If we get a setup short, how do I avoid getting run over on a trend day? Simple. I lose money, but I don't lose a lot. I try the short twice. 2 times. Short twice. If I'm getting no value pullbacks where I can get long, this is typically meaning that buyers are holding price up, pushing very aggressively. And if I get a high quality A+ short setup that fits 3 to 4 of my 5 sort of parameters or criteria, I take the short, and I'll take it twice. Max worst, absolute worst pain is I get stopped out twice on the short. I wrap it up for the day. We're done. 2 small losers. Walk away. Trend day. Didn't get the trade. Okay. Best case scenario on a trend day, you catch the entry. You're in the trend. If you don't, you short it once. Maybe it works. It doesn't. You short it twice. Maybe it works or it doesn't. If it doesn't, 2 times, you're done. We're done for the day. That's it. That's how we avoid these super trendy days. Well, Dave, I thought that, we needed these big trend days to make money. They're good. They're great if you get in with a trend, right? They're great if you get in with a trend. And if you don't, you end up missing the trend. It goes without you. Let's look at this day, for example. I'm just going back random days here, okay? Again, vehicle, 10K. This is the $12,000 vehicle. This is the $14,000 vehicle. Oops. This is the $18,000 vehicle, okay? 10K, it goes up to 12K. Maybe we're looking for value in here. We don't quite get it. Okay, we can't buy that 12K. Goes up to 14. All these micro pullbacks, can't buy them. We go up to 18. Okay, good. If we roll over, where's value? Where are we going to find value? Somewhere in this area. It's giving us a $4,000 by the car's value, a $4,000 pullback, right? A larger pullback, a value pullback, not just a micro pullback. This is our value. Where did I get long? Right here. And we played this. This gave us a value pullback. Can you see this? See these small stair steps? These are typically not for value. You can scalp these. These are not for value to get into a trend. This is for value. Comes back, gives you a good opportunity to get into a trade in this area. You have a defined target to say, I want to risk here, get in here, and I want to make this. You see the risk versus reward makes more sense too? Let's go back to these guys. This one's actually not that bad. It's actually pretty deep. We push up, we pull back. See, we get long in here, risk here, target here. So this risk versus reward is much less. It still works. It's just less. I like these trades. I want value on the chart and I want value in my trades. If we're not trending, the days become easier. Easier in the sense that you just don't buy anything in the middle of a range, okay? You just don't buy anything in the middle of a range. You buy the lows or you sell the highs. If you sell the highs and you get stopped out, you know you're on the wrong side of the trend and you just wait for the deep value pullback. If you sell the highs and it works, you are in at best price and you're targeting the lows and through the lows. Reverse for the long side. If you're ranging, you buy the lows, sell some at the highs, and hope you're in the trend. Okay? I don't want to get too complicated with this. I'm going to a lot of stuff, even a lot of the course material that we have. This is the last video I'm going to post with the free chat room trial. I will put it inside of the first comment and I'll pin it. This was a longer video. I hope you guys stuck around. If you did, you're going to get a heads up on this free trial. As always, like, comment, subscribe. My chart colors are a bit different. I've been playing with them. These were the original ones I was using. You can also let me know what you guys think on that. That being said, we'll chop it up there and we will see you guys on the next one.